Welcome back to Investing Talk podcast.
Today we're looking at stock. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Right. We've looked through, well, quite a bit here. Charts, filings, market sentiment.
Yeah, and our task today is really to cut through the noise on stock. Is this current momentum real, or is it just, hype?
It's a necessary question because, wow, this stock has been something else lately. Extremely polarizing, incredibly volatile.
Absolutely. I mean, we're talking about a company that swung from lows around, 30 cents, all the way up near $13 a share just in the last 3 months.
Crazy swings. So the core question we're tackling, based on everything we've seen, is, can this current surge actually last? Is now the moment to consider buying?
Let's start with the immediate picture, the recent action, because it's been pretty dramatic.
Yeah, that huge rebound surged 27% just on October 24th. That wasn't just random market noise, was it?
No, it really seems tied to news about some high-profile investors stepping in. Specifically, that reported $1 million stake from Mike Alfred.
And it feels like the retail crowd really grabbed onto that signal, didn't they?
Oh, instantly. Our sources show social media just blew up. X, Reddit. Suddenly everyone's talking about it, comparing it to other, past fast runners.
But we have to remember, this excitement comes right after some really sharp drops. Didn't it fall hard earlier in October?
It did, yeah. Dropped about 34% earlier that month. So volatility is definitely the name of the game here.
We should probably pause on that point because the risk here isn't just like normal market ups and downs. One number that jumped out from the sources was the beta.
Ah, yes.
Recorded at 17.4, that's huge. For anyone listening, beta measures how much a stock moves compared to the overall market.
Right. So a beta of 1 means it moves with the market. A beta of 17.4. That means if the S&P 500 moves 1%, theoretically this stock could rocket or plummet over 17%.
It tells you right away, this isn't really a typical investment. It's more like a high-leverage trade, isn't it?
Exactly. Only for those who can stomach genuinely wild swings. It acts less like a stock and, more like a super amplified crypto asset.
Okay, so keeping that extreme volatility in mind, let's pivot to the technical side. Because right now, the charts are screaming optimism, suggesting this momentum might actually continue.
Yeah, the technical picture is quite compelling at the moment. Analysts are pointing out that after that rally, the daily price candles are sitting nicely above both the 5 and 10 exponential moving averages, the EMAs.
And that's key, right? Because those EMAs, which track recent prices, they've shifted, they were resistance, prices the stock couldn't break past.
Now they're acting as strong support levels.
Exactly. And if you look at the momentum indicators, they're also lining up.
Like the RSI oscillator?
Mm-hmm. The RSI, which measures price movement speed and change, it's pointing sharply upwards now. It was deep in the bear zone, heavily oversold, basically signaling it was primed for a bounce.
And wasn't there another key signal, the MPD? Yes. The MCD, the moving average convergence divergence, it's crossed above its signal line. For traders, that's a really big deal.
Why is that?
Well, it basically marks a shift from negative price momentum to positive. It suggests the recent buying isn't just a temporary blip.
Okay, so strong signals, and there was some speculation about how strong the next move could be.
Right, because this recent pullback, this retracement, was much deeper than the previous dips. So some analysts are thinking the next leg up could be, parabolic.
Parabolic meaning like almost straight up.
Pretty much. An extremely sharp move. They're talking about potential gains that could blow past the old moves of, 188% or even 300%.
Wow. Are there specific price levels traders are watching?
Yeah, the sources mentioned initial Fibonacci resistance levels. Those are common targets based on math ratios, around $1.53 and $2.31, especially in the 3-day chart.
But the real confirmation point
Seems to be when the RSI crosses its center line. Technical analysts think that could really ignite things, potentially pushing the stock towards higher Fibonacci levels, maybe into what they call the golden pocket range.
Okay, so the charts look bullish, undeniably bullish right now, but we need to understand the why, right? Why is the market potentially pushing it like this?
Exactly. And that takes us away from just the charts and into the company's actual story, its fundamental transformation.
This is really the core of the bull case, isn't it? The idea that the company has basically adopted the MicroStrategy playbook.
That's the comparison being made, yeah. It's more than just passively holding Bitcoin. They seem to be actively reshaping their entire identity to be a direct proxy for digital asset growth.
And that comparison seems justified by their recent moves, like that big merger.
Absolutely. They completed that massive $1.34 billion all-stock merger with Semler Scientific. Paid a big premium for it, too.
And that deal, plus other holdings, makes them a major player in Bitcoin now.
Sector leading, according to the sources. They're sitting on 11,000 BTC. They're basically betting the farm on this treasury strategy.
Okay, but whenever a company grows that aggressively, you have to ask, can they actually handle it? Can they sustain it?
Good question. Fundamentally, their trailing revenue is pretty modest, around $5 million. But the balance sheet does offer some comfort.
In terms of liquidity?
Yeah, very strong liquidity. The quick ratio is 4.4. Anything over 1 suggests a company can cover its short-term debts easily. 4.4 is exceptionally high.
And that's mostly backed by their Bitcoin holdings.
That's the underpinning, yes. That massive cushion of roughly $675 million worth of Bitcoin on the balance sheet.
And they've made some leadership changes, too, trying to signal stability, perhaps.
Seems like it. New executives appointed, including a new CEO and a chief risk officer. It suggests they know they need to focus on integrating these huge new assets and building up some operational credibility, to match the big strategic vision.
Okay, but this brings us to the warnings, the cautions section. And this is really critical for anyone looking at this. The risks are just as significant as the potential rewards.
They are indeed. Cannot be understated.
We already talked about that absolutely mind-blowing volatility, that beta of 17.4. Your capital is exposed to just extreme swings.
Right. And then when you dig into the financials beyond the liquid assets, well, that aggressive growth comes at a cost.
The bottom line isn't pretty yet.
No. Profit margins are deeply negative. We're looking at a trailing 12-month net loss of over $23 million.
Ouch. $23 million.
Yeah. Now, some of that is expected with scale-up costs, integration from the M&A, but still, management absolutely has to show they can get costs under control and actually realize synergies from these deals soon.
Okay, but you mentioned something earlier, the single biggest red flag.
Yes. The dilution risk.
Yeah.
This is crucial. There was an SEC filing on October 10th.
What did it say?
It revealed plans to register 1.28 billion new shares.
Right.
Primarily for insider sales.
1.28 billion.
Yeah.
With a B.
With a B. Now, companies sometimes do this, allowing insiders to eventually cash out options as part of growth plans. But the sheer scale here is enormous.
So that creates a massive overhang, like a potential flood of shares hitting the market.
Exactly. If even a small fraction of those get sold, it creates immense downward pressure on the price. It directly fights against all that bullish technical momentum we just talked about.
So it really is a massive tug of war. You've got these strong technicals and this bold Bitcoin strategy pulling up.
Fighting against these deep operational losses and the huge looming threat of 1.28 billion shares potentially hitting the market. Plus the sentiment hit that could cause.
And we can't forget the general crypto risk, right? Since their whole value now is tied to Bitcoin.
Completely exposed. Any regulatory changes impacting crypto or just the inherent volatility of Bitcoin itself. If Bitcoin takes a dive, their main asset dives with it, making those financial losses look even worse.
Okay, so for anyone trying to make sense of this, the next few months sound absolutely critical. What are the key things to watch?
Number one is the Q3 earnings report. Sources are a bit mixed. Maybe November 1st, maybe November 13th. But that report is vital.
What does it need to show?
Two things, really. First, it needs to somehow validate this aggressive Bitcoin strategy, show it's working. Second, and maybe more importantly, it must show real progress on managing expenses, getting that $23 million loss figure under control.
And if it doesn't?
The market will likely punish it severely.
What else besides earnings?
Keep an eye on institutional buys around mid-November. Was Mike Alfred's investment a one-off, or are other big players coming in? And then looking further out, there's a strategic update on Bitcoin holdings expected in January.
So that'll give more insight into their core strategy.
Hopefully, yes. Insight into the health and their conviction in that treasury strategy. But basically, the stock's future boils down to two things.
Which are?
One, can management actually execute this ambitious plan flawlessly? And two, does Bitcoin keep going up? It's not a balanced picture.
Right. So maybe a final thought for you, the listener, to chew on. Given everything we've discussed, the Bitcoin reliance, that insane 17.4 beta, how much of this recent surge is really about the company executing its plan?
Versus how much is just a super leveraged bet on the price of Bitcoin itself, that's just wrapped up in a company structure?
Answering that question for yourself might help you decide if you view this as a potential high-stakes trade or something you could possibly hold for the longer term.